Ladies and gentlemen, I'm thrilled to introduce you to our next fireside chat, how to optimize your tech stack to reach a global retail market. Please warmly welcome our esteemed panelists from Adaptive Financial Consulting and FXCM Group. Brendan, Matt, welcome on stage.
Good morning, everybody. Thank you for coming along and joining us today. The title of the talk fairly abstract. I think we're going to talk about some more concrete things today, aren't we, Brendan? Firstly, congratulations. Press release went out this morning.
Thank you.
Why don't you take us through what you've announced?
Yeah, very exciting day for us. So today we're launching here at the show Tradu, the new multi-asset neo-broker, which we've built along with Matt and his team over the past 2 years. So very exciting to kind of provide some clarity, I suppose, and back up a little bit. Most people, certainly at this show, would know me as the CEO of FXCM. I'm actually the CEO of Stratus Group, which is the parent of FXCM. So it's kind of like Alphabet has Google and YouTube and Nest and a bunch of other subs. Similarly here, Stratus Group has FXCM and now Tradu. So they're separate offerings. FXCM is a stalwart in the FX CFD industry. Many thousands of happy customers. It will continue operating as it always has, but separate to that now, we're launching Tradu, which is this new multi-asset broker. It's a different name, quite obviously. It's a different platform altogether and a new set of products that are offered to clients. So Tradu will have FX and CFDs. It will also have listed equities trading. It will have a spot crypto exchange inside the portal. And it will have an e-wallet solution, which nicely allows clients to tap and pay for their coffee, but also move money around the ecosystem between the trading accounts and the e-wallet account, et cetera. So, yeah, really excited to be launching this.
So, in your quest to optimize your tech stack, it sounds like you built a new one.
Yeah.
What was the market opportunity that you were going after? What spot in the market did you see that was vacant, wasn't being filled, wasn't being served properly?
Yeah, so right now, multi-asset trading means one of two things, generally. You have a lot of accounts at a lot of different brokers, and therefore a lot of apps and a lot of logins, and you have to deal with the cumbersomeness of if your next trade, is going to be Tesla, you got to move some of your risk capital from your crypto account to the shares account and then place the trade. Alternatively, you could have one account at one provider and one app, but it's a discombobulated, kind of dysfunctional, very convoluted platform that's made a lot of sacrifices in the offering of each of the asset classes to bring them all together into one UI, basically. So we thought we were particularly well positioned to do it the right way. So the Tradu way is it's one firm, obviously, one app, one login, but you get access to a portal, and then you click into each of these sub-asset classes, or these sub-accounts, rather, and trade the asset itself on a standalone basis so that we can provide the customer with the best-in-class option.
I think the new app, new portal approach is one thing, but you're pretty clear that it's not a new team, right? You're building on years of experience to deliver the system.
Yeah, so Stratus Group has been building trading technology for over 20 years, and obviously I have somewhat of a biased opinion here, but I certainly consider FX traders to be kind of the super users of trade tech, right? They leverage very highly. They trade 24 hours a day. They want no latency. They want no downtime. And if you provide technology that satisfies that audience, you've got a core expertise. And it was always going to be the plan that Tradu would certainly capitalize on that expertise. So the strategy that works for us is we continue to build out that element of the platform and then work with the right third-party partners to enhance it with other asset classes or certainly trading tools that our clients would want to see in the app itself.
Yeah, and one of the things we've talked about in the past is this concept of the super app.
Yeah.
You can't. Maybe X Twitter is going to be a super app next month. Maybe it won't exist. Who knows? But there's certainly other providers in the space working towards this.
Yeah.
You seem like Tradu was the first step of a journey to get you guys there, right?
Yeah. So the concept of a finance super app is pretty well trodden territory now, and a lot of the biggest companies on planet Earth are setting that course as their strategy. Like you said, X's, Apple, WeChat. There's quite a lot that want to build the finance super app to to conquer the market, and it's certainly a valid ambition. I think the one-stop shop element is is a customer demand. In fact, they're building the super app for the average person, though, right? So their focus is going to be on what the average consumer would want functionality-wise, like things like splitting the dinner bill or categorizing your expenses, which I'm not discrediting those. Those are certainly valuable functionality and displays to have in the app. The strategy for Tradu, though, is we're going to build the finance super app specifically targeted for the active investor, right? So the client has an amount of risk capital. With that risk capital, they see themselves as kind of a personal macro fund manager, and they don't know if their next trade is going to be in a digital asset or a share or the euro, for example. So we want to give that particular client segment the app that they deserve, the super app that they would want.
And this active investor persona is, you would expect someone slightly resistant to the idea of gamification of toy trading applications, right? You're positioning yourselves as a firm that looks after the sophisticated active investor, and you've spoken pretty strongly about your thoughts around bells and whistles and kazoos and gamification in general and what it means for the industry, right?
Yeah. So back to the kind of two ways of going about multi-asset trading. The one account way, like I said, is a very discombobulated, disjointed interface, and a lot of that is frustratingly purposely so. A lot of the focus for the other multi-asset brokers is the gamification of their customers' attention and just trying to keep them on the app and keep them trading. But even more so, building the interface in a way that encourages them to trip into the more lucrative products.
Inducement, right?
Inducements. Yeah. So we want to cut through all that clutter. Like we keep using this mantra at Stratos and Tradu now that this isn't a game to us. We're not here to gamify the app. We're here to empower the active investor, and that's what we're doing.
So we are sitting on stage together. I'm the CEO of a company called Adaptive. We're a technology provider. We build trading technology for people that, in our view, value differentiation via technology. And in Stratos, in Tradu, we found a perfect partner. You guys thought very early on that building, not buying, was a pretty non-negotiable part of the journey.
Yeah.
Why is that?
Well, like I said, we have this core expertise of building highly capable, sophisticated trade tech, and we're going to keep that core expertise all throughout. We found a great partner in Adaptive. We found a great partner in other areas that will continue to enhance the platform. But we were never going to abandon that core expertise. We built that over 20 years, and it's always been part of the game plan.
So you're building, but you're not building from scratch.
Right.
You're building what we would consider to be pretty smartly.
Yeah.
How do you think about the areas you focus on versus don't?
Yeah.
Right. There's you could have taken 4 or 5 times as long to get to where you are today by starting at a lower level in the stack, right? And it wouldn't necessarily add anything to the business proposition, to the user value, but that's an informed view you've taken, 20 years of experience, so on and so forth. You've taken a view on what matters and what doesn't. How do you think about partitioning the space?
Yeah, so there are a lot of vendors out there that provide state-of-the-art solutions. You guys are on that list. So just as an example, to build a full stack, kind of self-clearing stack for equities trading is a Mount Everest of technology to climb. Why would you do that now? And once you complete it, congratulations, you can't charge any commissions because that's where the market has gone to.
Exactly.
So these solutions are there, so it was just a matter of partnering with ours. And I'm very proud of, I'm very excited about the first version of Tradu and what we're bringing to the world. I'm more proud with how it's been built, right? So any trading platform has a ton of integrations behind the scenes with your accounting ledger, with your CRM, with risk management systems and transaction reporting and things like that. And if you hardwire those in, you're not going to scale. And the next time you need to swap out a vendor, the whole system comes down. Like it's a big lift. So we built this, and again, with your help, we built this in a way that is scalable, right? So there are microservices and APIs. If we want to swap out vendors, if we want to add a new vendor in, it's very plug and play in that way.
Yeah, there's a tech stack element to the build, of course, which is about infrastructure, code, systems. Then there's the finance/liquidity stack, right? And where the liquidity flows go, and where the trades are settled, how they're cleared, where the risk is managed. And that has to be pieced together in a fairly sophisticated fashion. The answer, I think, isn't to your point about the equities market and how that has changed and moved to a place where trades are free, in effect, particularly for the retail user. The challenge with bringing a platform to market is, as you say, it takes a couple of years, even if you do it smartly. There's another few steps on the journey. You wouldn't have built a system with perfect clairvoyance, right? You don't know where the market is going to be in 2 years' time. How have you hedged against changes that you don't foresee?
Yeah. So like I said, building the platform in a way that you can plug and play, right? So AI is a great example. I know it's the buzzword, but with AI, there's going to be an unforeseeable amount of demand and interest in high sophisticated trading tools, and we weren't setting our course to be a leading AI engineering company, but we built the platform that as those tools come out, whichever ones win the race, whichever ones our customers call us up and say, hey, I want access to this thing, the platform had to be built in a way that we could just integrate it and say, fine, happy to do that. It's now part of the charting package. It's now part of the portal interface, whatever it may be that makes the most sense. So we're really excited about that.
Yeah, microservices is a buzzword, but
Yeah.
the capabilities that it provides, avoiding a big monolithic solution that bundles all these different asset classes together, right?
Yep.
The user has a seamless experience, but that doesn't mean you can't switch out the components over
Right.
time. And your point about AI is a great one. I mean, the last week has seen the leading AI company go from hero to zero and now back to hero again, with the CEO working for Microsoft and then OpenAI again. Who knows where we'll be by the end of the week?
Yeah.
And the one thing, as a small vendor in the space, the one thing we think about AI is that it's too big and too fast moving, and there's too many billions behind it to place a bet on something now. We're going to have to wait and see how it plays out in the future. So let's be a bit more specific about tech stacks then. There's a lot of choices that you have made along the way that we've made together. One of the big talking points of the last year has been PWAs. For those that don't know, PWAs, progressive web applications, the ability to give you a native mobile app experience that isn't deployed through the App Store. Why wouldn't you want to deploy through the App Store? Well, because the App Store owners, the gatekeepers, can be somewhat capricious in how they view financial services related applications. And there's been some changes in the market over the last 12 months that fit into your thinking.
Yeah, you said it well. The Google and Apple app stores have become concerningly important, concerningly powerful gatekeepers of not just financial services industries, but at this point, almost all industry. And they can make decisions, that suit them. It will, obviously. And it's not only getting your app on their app stores, they're increasingly trying to control more of the economics that happen within your app if it was downloaded from one of their app stores. So it's quite draconian, and nothing highlights that more than the Apple App Store banning MediQuotes last year, seemingly without warning and without any stated or overtly stated reason. I think everyone should be concerned about the amount of control the app stores have. So the PWA allows us, it builds another door, right? So we could, if for whatever reason, in their region or for policy of Apple or Google changing, the app no longer becomes available to them, we can give them a link to download or install the PWA instead, and you click an option to add it as an icon to your home page, your home screen, and therefore it operates like any other app on your phone, which is great.
Yeah. The App Store providers have one eye on the regulators in the various jurisdictions that they operate in, and they have a fairly poor understanding of the intricacies of any particular market, financial services, retail broking, retail trading in particular, and they have a fairly blunt instrument with which to manage apps. They can just delist them. That's it, right? There's not really a gradation of the steps they can take, and you might be providing a fairly sophisticated app that eschews gamification, but you will be caught up. You could easily be caught up in the collateral damage from a poor market participant, another FDX, but perhaps in the retail space, you could imagine. I don't think we've seen all of the bad actors come out of the system yet, and I think you're a step ahead really of the market in that there are other firms building native mobile apps still today, but they're also increasingly hedging with a desktop web app that scales down and can be run as a PWA. So it's part of the piece of the puzzle. The other buzzword we see, we hear a lot at the moment, and this might be a little bit because of our institutional perspective, is the cloud, and the migration of liquidity to the cloud. Now, I think in the retail broking space, the cloud is part of delivery, right? It's how we reach our clients. It's a way to achieve global scale, have global points of presence, get last mile web push of real-time prices. But in the institutional space, markets are formed, liquidity is distributed primarily not in the public internet, in specific leased lines provided by telcos and data centers provided by colos. The systems you're building, the systems we're building are cloud native out of the gate.
Yeah.
Do you see that there was never going to be another choice there? But do you think the cloud migration of liquidity is going to have an impact eventually in the retail space?
It has to, yeah. So we do run a hybrid architecture. So cloud is rightly the way forward, is the solution. It is ultimately scalable. It is secure, is on-prem. It's adaptable. It's flexible. So if your client base rather grows in a specific region, you can adapt fairly easily to that. The one thing that ties us to on-prem still is price formation, and that's still in NY4 via cross connects that we have with all the banks and the HFTs. And you have to have the quickest source of price data. From there, we can distribute it through cloud services and CDNs and get it out to clients through the cloud, so to speak. But still, price formation is done in New York, a little bit less so, but in London as well. As all those LPs migrate to the cloud, and there's kind of uniformity in that price formation process, we will happily migrate as well. This is kind of the last, the last battleground, I suppose, of kind of ultimate migration to the cloud.
Yeah, and I think to your point, we talked about FX previously, and equities in the institutional space where those markets are being made and when those prices are being formed. Those markets, those different asset classes, I should say, have very different shapes. The equities market, particularly obviously in the US, is highly condensed and highly interconnected, with a huge range of different vendors playing at different levels of the stack, providing different services up and down. And that will move slowly but painfully to the cloud. And FX will move, I think, in a slightly more piecemeal fashion, simply because of the breadth of the depth and the breadth of the retail offering, right, which isn't particularly latency sensitive. It thinks about features, it thinks about e-wallets, thinks about multi-asset trading in a far more sophisticated and user-friendly way than the institutional platforms do, right? Which you can be deep into fixed income and never think about FX or never think about equities for an entire career.
Yeah, good. Well, Matt, I can't let you get away without me asking you some questions as well. Adaptive builds a lot of trade tech and fintech, and curiosity for me is what do you see as the biggest gap between what is now technologically capable to accomplish and what actually brokers like Tradu are able to get in front of customers and for those customers to be utilizing?
Yeah, it's a good question. The gap between aspiration and ability, right? I think there's two answers to that question. I think most prosaically, it's just the ability to push new functionality out into production, as we would call it, as a technologist, which means basically getting in front of your users, connected to real liquidity, getting real live trades flowing through the system. We have clients with very large tech estates who have billions of pounds worth of revenue, who are struggling under the weight of all of that. A case in point, high interest rate environment that we've all been living in for the last 18 months. Obviously, the change from a low interest rate to a high interest rate environment presents a number of commercial opportunities for brokers and market participants dealing in the fixed income space. But to capitalize on that in an electronic business, you need to get new software into production, right? And if your software delivery pipeline takes as long as it's taken you guys to build a whole platform just to get one little bit of new execution capability into the market, you could suddenly find yourself marooned as good for all of us, I think. The interest rates start coming away. So you've spent a bunch of money, you've had a really good business idea, you know there's demand, it's just taking you so long to execute on it that the market has changed, or changed back, I should say. And I think that the macro economic conditions of the last 4 years since the beginning of COVID have shown a high degree of instability.
Yeah.
You don't need to read a lot of forecasts of the future to see that most predict a similarly unstable macro environment over the next 3 to 4 years, as we've experienced in the last 3 to 4 years, be they led by geopolitical situations or some other unforeseen disruption. All of that will somewhat morbidly, shall we say, lead to market opportunities. But if you're caught up in a tech platform that can't shift, that you can't push new features into production with, you're just going to get left behind. And while we could also talk about, and indeed I will, talk a little bit about some of the positives that we see coming down the pipe, if you don't have that ability to put technology into production, the dreams of generative AI and what it will mean for your business don't really matter, right?
Yeah. So you gave a good example, and I'm thankful that you didn't use us as one, but to throw myself under the bus voluntarily.
We wouldn't put you under the bus straight away.
But we did come to you and say, we want all this and we want it yesterday. So can you elaborate a little bit about your model of delivering technology and how you meet demands from customers like me?
Absolutely. So of course, everyone wants everything. Everyone spends a lot of time thinking about what their next step will be, which they should do, because these steps should be thought of very carefully. But then obviously the answer to when they want it is yesterday, right? Once you've come to a conclusion, you want it as quickly as possible. Our answer to that is to really not be a point solution provider. Like, there are lots of vendors here at the conference who sell a specific piece of that puzzle that you were talking about, the equities tech stack, right? Lots and lots of different components, lots and lots of different capabilities. We think of ourselves as really serving a broader base than just that. We have a platform that we've invested in over the last 6 or 7 years that we use to accelerate the delivery of front office trading systems that we think solves the necessary but not sufficient parts of the tech landscape. Our approach is to build bespoke solutions for our clients, for those people that value differentiation via technology, and let them own the IP. We think that the core differentiation of your business should be owned by you. It shouldn't be in our platform. That means that we become coupled in all sorts of uncomfortable ways, right? It would mean that at some point we're no longer able to be good partners. With our approach, we have an underlying platform. Happy to talk more about it at our booth down on the trade show floor, that accelerates the delivery of these trading systems, that lets you build the differentiating parts, the parts that you use to attract customers, generate revenue, stand out from the rest of the market, without having to do all of the heavy lifting, right? To the point that Brendan makes, you could spend a lot of time building an equities trading platform from scratch and not make any money with it. So you want to be standing on top of a lot of technology. And this is a shift that's been happening for a long time, right? Like, the history of technology since the 70s, 80s, is about increasingly high levels of abstraction being built on lower level infrastructure. And we happen to think that at the moment, our technology platform is the preeminent in the marketplace to build front office trading systems. But the abstraction layer moves over time, right? One of the things that will change with the migration to the cloud for the institutional markets at least is the huge cost that is sunk into the telco, colo, hardware and software landscape. And once a cloud provider is the telco, is the colo provider, and is the hardware provider, there is a huge amount of cost that's going to come out of that market, the cost base for those market participants, a huge amount of vendor disruption, and hopefully a lot of excess economic value will be created through innovation. And that's what we think is one of the big things that will be happening in the next few years that should be very interesting. And I think our ability to pivot with different investment cycles, shall we say, it comes from the fact that we haven't got too aligned to any one particular asset class.
Yeah, good. So, I mean, Adaptive, you guys have built crypto platforms, exchanges, matching engines, order routing systems. You've done full stack stuff. Is there, of the work that you've got, in the pipeline now, is there a theme that excites you about how it's shaping up? Yeah,
I think we're increasingly seeing the penny start to drop from market participants, both big and small, about replatforming. There's and I think it comes back to and would be my bias here because I'm very close to it. The disruption we see as firms move away from physically provided telco hardware infrastructure, right? any particular bit of capital markets infrastructure is some software that's really coupled to some underlying physical infrastructure, be it distributed globally or just distributed in a single data center. Moving away from that and putting those components into the cloud is going to require re-engineering for any of the bits and pieces that care about performance or resilience. And the reality is that performance matters for all of these components and resilience matters for all of these components, because FX traders want prices at very low latency, they want availability at 24/7 availability, and they also want new features coming into the platform fairly regularly, right? So there's a lot of constraint there, and there isn't going to be, I don't think market participants, be they retail or institutional, are going to accept the cloudification of their digital experience. Facebook's motto, move fast and break things. Do you really want your bank account to be broken for a weekend? A funny story that I probably shouldn't relay, but a friend of mine works for a bank in Singapore, and they quite regularly have outages where people just can't pay for things, right? It's a highly digital economy, and people can't pay for dinner. Yeah. That's not what people want. So there's going to be a very careful stepping into the cloud, this cloud future. It will enable a lot, but we can't move towards a world where we take a retail approach to stability and resilience with people's finances.
Yeah. Good.
So we've got 4 minutes left. Any questions that we could take from the floor? I saw lots of heads nodding when we were speaking. I hope you don't all agree with everything we've said. So does anyone want to just disagree? No?
I guess they do. We did a good job.
We did a good job.
Yeah.
Everyone's agreed. Okay. Oh yeah, question at the back there. Yeah, fantastic.
Can you provide more details on the products you're going to offer? Like crypto, is it spot crypto?
Yeah, so Trader's going to have it will have crypto CFDs in the platform, and separately we'll have a spot crypto exchange as well, which we're really excited about. I'm excited about all of it, but I'm particularly excited about crypto. I think clients rather are seeking heavily regulated companies to trade crypto with for good reason. So I think that will act as a tailwind for us. Also, a theme that I'm very excited about is, for a while, it felt like the story, or the assumed story, was the crypto behemoths were going to take over the financial services companies, including even the banks. That is no longer the story, quite clearly. And one of the themes I'm really excited about is FX players in particular are bringing their technology, which is very similar to that of the crypto market, over, and we're bringing with us our margins, right? So in FX land, I said this at the show last year, we quote on a $1 per million basis. Like the fractions that FX broking, whether you're clearing or doing execution, the margins are small fractions of a tenth of a basis point. And crypto is still quoting in basis points, and very popular crypto exchanges are still charging 1%. That's 1,000 basis points, and 100 basis points. Am I wrong? Yeah, 100 basis points. But it's $10,000 a million. In FX, we're happy to make $5 a million. So anyway, we're bringing the technology with us of an FX firm, but we're also bringing the pricing. So we're happy to do crypto broking at a small fraction of what customers are paying in the most popular exchanges at the moment.
I think it's a really valid point you make. We've seen crypto, and we've built a lot of crypto infrastructure over the last 7 years. We've seen the personas of those firms change over that time, from a period where it really was like groups of people who are best described as Peter Pan and the Lost Boys, with a vision and an ICO and a dream to reinvent absolutely every single part of capital markets, financial services, banking from everywhere, to now what we see is very sensible institutions, very well regulated, very happy to be regulated, who have obviously a tension in the relationship, but really see their value in the marketplace as being regulated, right? As being stable fiscal custodians in the market, and they are the ones investing confidently into the crypto space.
Yeah.
Right?
Yeah.
We had a firm pull out of the market earlier this year, I think it was, towards the end of last year. No, earlier this year. And their stated reason was that they were uncomfortable with the increased level of regulatory oversight into their business model. I mean, they were just comfortable saying it out loud, right? And that's really interesting, because there is a change, and I think in 6 months, 12 months time, there will be more stability, more regulation, and it'll be a safer place for people to be, which is great.
Yeah.
Right. On that note, unless anyone has a very quick last question, I just will thank you very much. The timing was great. Thank you for being here today to announce. It's fantastic. And I hope there's lots of interested parties to the booth downstairs to hear more.
Yeah, by all means, tradu.com if you want to sign up for more information and be on the alert list for when it goes live in your region, TRADU. Thanks, everyone.
Thanks, everybody.